It's Thursday, September 18th, 2025. Welcome to your daily news update on Blip Brief. Small, but almost everything updated every weekday. Okay, let's dive straight in. Indian markets closed higher today. The Sensex and Nifty 50 both up 0.4%. What was behind that positive push?
Well, it looks like a mix of things. Definitely optimism around the India-US trade talks. That's one major factor.
Right, those seem to be gaining some traction.
Exactly. And then you had the widely anticipated interest rate cut from the U.S. Federal Reserve. That really helped sentiment globally, and especially in emerging markets like India.
So trade hopes plus that Fed signal. And we saw that energy in specific sectors, didn't we? Nifty PSU Bank led the charge, up, what, 2.6%?
They were very strong showing, yes. And Nifty India Defense also did well, up 2.0%. PSU gained 1.3% too.
That PSU Bank performance is notable. I mean, given their history, is this just sentiment or is there something more fundamental happening?
That's a good question. Look, sentiment helps, no doubt. But the sustained interest suggests investors might be seeing, improving fundamentals, maybe better asset quality, cleaner balance sheets.
Okay, and defense. Still that focus on Make in India.
Absolutely. That 2.0% gain really points to the ongoing government focus on domestic manufacturing and security. It's seen as a sort of long-term growth area, especially with global tensions.
Makes sense. And looking at individual stocks, Tata Consumer Products had a good day, up 4.1%. State Bank of India also strong, up 3.1%. Really highlighting that banking strength.
Yes, definitely some standouts.
But it wasn't all green. Bajaj Finserv dipped 1.1%. Titan Company down 0.9%. So some profit taking even on a positive day.
Right. It feels like a bit of consolidation. Even when the market's generally up, you'll see investors taking profits in stocks that have run up recently.
Right.
Or maybe there were some sector-specific factors at play. It's healthy, really. Shows a balanced market.
Okay, shifting gears a bit. The IPO market saw some excitement. Urban Company's debut was, well, pretty spectacular. Listed at a 58% premium, right?
Oh, yeah, very strong debut. It even hit an intraday high of 73% before closing up 2%.
So what fueled that? Just the novelty?
Partly, yes. It's the only listed player in the online home services space right now. That uniqueness is a big draw. And the IPO size was relatively small, which also tends to drive up demand, that scarcity factor.
Interesting. And speaking of IPOs, Grow seems to be repositioning ahead of a potential listing, moving focus towards lending and wealth management, away from broking.
That's right. It looks like a strategic pivot. The broking business is facing some profitability pressure, especially with regulatory changes around F&O trades.
Payment options, yeah.
Exactly.
Yeah.
So they're diversifying their revenue streams, trying to build a more resilient model, before potentially going public.
That's happening against a backdrop where Jefferies India sees huge potential for the IPO market overall.
A massive potential, yes. They're projecting the Indian IPO market could add, $1.3 trillion to $1.5 trillion in market cap over the next, say, 7 to 10 years, driven largely by strong domestic investor interest.
Wow, that's a huge number. It really paints a bullish picture. Meanwhile, fertilizer stocks are back in focus. Is that just the monsoon effect?
The monsoon outlook is definitely a big part of it, yeah. It directly impacts demand. But you also see prominent investors getting involved, which suggests they might see more fundamental value or maybe anticipate policy changes. It's not just seasonal.
Okay, let's look at some specific corporate stories reflecting bigger trends. Tata Electronics and Apple, quite a link developing there.
It really is. Apple's iPhone shipments to the U.S. now account for nearly 37% of Tata Electronics' FY25 revenue. That's substantial.
And it speaks volumes about Apple's strategy, doesn't it?
Absolutely. It's a clear sign of Apple actively diversifying manufacturing away from China, moving more towards India, partly driven by, potential U.S. tariff concerns. It's a big win for India's manufacturing ambitions.
Definitely. On a less positive note, Marico is facing an income tax survey over alleged tax evasion.
Yes, that's an ongoing situation. Compliance issues like that always carry risks for a company.
And Godrej Enterprises Group announced a major restructuring.
Right, the 19,000 crore group. They've reorganized their 14 verticals into 3 clusters: consumer first, nation first, and future first. The idea is more focus, more agility, but they've said no immediate IPO plans for these clusters.
Okay, let's broaden the view globally. The U.S. Federal Reserve, they finally did cut rates.
Yes, the first cut since December. Down by a quarter point, 25 basis points, bringing the key rate to 4.1%.
What was the main driver? Still worried about the economy.
It seems the main concern now is the health of the U.S. labor market. That's outweighing the lingering inflation worries, at least for now. It's a balancing act.
And they signaled more cuts to come.
They did. The Fed indicated possibly two more cuts this year and another one in 2026. So setting a path for gradual easing.
And how did markets react? Pretty positively, I gather.
Yeah, U.S. equity futures rose. Investors are betting on those further cuts. Tech and AI stocks in particular saw renewed interest.
And what about currencies and gold?
The Indian rupee strengthened further. It gained 0.27% against the dollar, crossing the 88 mark for the first time in 3 weeks.
Driven by the weaker dollar and maybe those trade talks?
Both, yes. The dollar weakened ahead of the Fed decision, and the optimism from India-U.S. trade talks definitely helped the rupee. Gold, meanwhile, jumped to a record high right after the cut.
As you'd expect.
Right. But then it eased back a bit, closing just 0.2% lower, some profit taking after that initial surge. It did hit a record high earlier, though.
Now, this WTO forecast on AI caught my eye, boosting global trade by nearly 37% by 2040. That sounds huge.
It's a staggering number, isn't it? And they're projecting global GDP increases of 12% to 13% alongside that.
How? Beyond just making things faster.
Well, the WTO report suggests AI will fundamentally cut trade costs, better logistics, smoother customs, even creating new digital services. But it's more than efficiency. It's about reshaping competition. Businesses need to figure out how AI gives them an edge. And for countries, developing AI infrastructure becomes crucial to avoid being left behind.
A potential new digital divide, then. Okay, back to India. System liquidity is tight, down to a 3-month low.
Yes, mainly due to tax outflows. It tightens up the money markets, meaning short-term borrowing costs for banks can edge higher. It's a normal part of the cycle, but the RBI monitors it closely.
Right, but on the fiscal side, some potentially positive news from the finance minister. GST reforms injecting funds.
That's the expectation, yes. Around euro 2 lakh crore potentially injected into the economy from recent GST changes.
And something about green energy savings, too.
Correct. The GST reduction on green power equipment is expected to save maybe 2,000 to 3,000 crore annually in power procurement costs. It's a neat policy alignment, boosts consumption, and helps the green transition by making renewables cheaper.
A double benefit. And trade deals remain a big focus for India. We mentioned the U.S. talks, but there's more happening, right?
Definitely. India and the UAE are reviewing their existing pact, and talks are set to begin in November for a free trade agreement with the Eurasian Economic Union, that's the five-nation bloc.
So a lot of diplomatic and economic activity on the trade front.
It's all about diversifying partners and strengthening ties. Opening new markets, reducing reliance on any single one. Crucial in today's world.
And within the financial sector itself, SEBI is looking at broadening participation in commodity derivatives.
Yes, they're considering allowing banks, insurers, pension funds to participate. Could really increase market depth and liquidity. They might even allow foreign portfolio investors in some non-agri contracts.
Making the market more sophisticated. Meanwhile, NABI FID is changing its funding strategy.
NABI FID, the infra finance bank, yeah. They're leaning more on bank loans this year rather than bonds.
Why is that?
Simply put, banks are offering better rates right now, below 7%. Plus, they've had a lot of borrowers prepay loans over 10,000 crores, so their immediate funding need isn't as high. Gives them flexibility to choose the cheaper option.
Makes sense. Okay, let's touch briefly on some geopolitical points. The PMO is apparently seeking input from companies on handling potential U.S. tariffs.
Yeah, it suggests that despite the ongoing trade talks, the government is preparing contingency plans, trying to shield Indian businesses from potential tariff impacts.
And the WTO had some criticism for India.
Yes, over blocking an investment pact, apparently. It just highlights the ongoing, push and pull in global trade policy discussions.
Separately, former President Trump made some remarks during his UK visit.
He did. He listed several countries, including India, China, Afghanistan, and Pakistan, in comments about drug production or transit routes posing threats to the U.S.
And sadly, some tragic news from the U.S. as well.
Yes, a terrible shooting in Pennsylvania, 3 police officers killed, 2 others wounded in Codoras Township. The suspect is also deceased. Just a grim reminder of other challenges nations face. And our aim here is just to report these developments neutrally based on the sources.
Absolutely. Now, before we wrap up, let's look at a fascinating scientific development, AI predicting solar storms.
That's right. A new AI model from NYU Abu Dhabi. It analyzes ultraviolet solar images and can apparently predict solar wind activity days in advance, much more accurately than current methods.
Days in advance. That sounds like a potential game changer, especially thinking about like satellites, power grids.
Exactly. Solar storms or space weather can cause major disruptions. Think satellites, navigation, power grids. Getting several days warning instead of just hours is huge. It gives critical time to take protective measures, safeguard infrastructure, maybe prevent widespread blackouts. It's a really significant step for resilience against space
It's
weather.
truly remarkable. It really puts things into perspective.
It does.
And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most. As we've seen today, from geopolitical tensions to scientific breakthroughs, the global landscape is shifting rapidly. It leaves us with a question. In a world being redefined by both macroeconomic forces and technological leaps, where does true value lie for the long-term investor, and how might you best position yourself for a future that's clearly moving faster than ever?